All right, happy Sunday. What's good? What's good? What's good? Hope everybody here is doing great. Excited to tap in with y'all on a Sunday evening as we are wrapping up the end of the year, man. We are officially like less than 2 weeks from 2026. Ooh. So yeah, definitely looking to make the most out of what is left. I will say the bulk of like I don't know, like the expected best trades of December are probably behind us at this point. We have come off of like back to back really strong weeks, at least trading the specific models that I use and teach and whatnot. I'm willing to take a jab at the markets or whatever on these non holiday days that are still left. But for the most part, again, not really expecting anything crazy. But at the end of the day, if I will take my confirmations if they're there and see what happens. All right. So yeah, with that said, let's definitely get straight into it. Hope you guys have had a great weekend so far. Actually, just like came home today from staying the weekend at families up north. So I don't know, I'm pretty beat today. I'm not gonna lie. I've been just chilling all day today. Um, but yeah, let's kind of break down, where we're at in price for NQ right now, and just kind of go over last week as well. Cause if you guys watch these weekly, you can always kind of go back and see how we recap the weeks and everything as well. And I think that'll give you a really good sense of like how on point we are when it comes to like understanding the trend, direction, targets, all those different things that we prep for at the beginning of the week, and then at the end of the week, you always got to kind of go back and be like, well, how on point were we? Did the market kind of surprise us? Did it basically do what we thought it would do? I think those are important things to pay attention to, of course. But yeah, as far as news and trading days, non-trading days, all that good stuff. We do have a few days before Christmas, obviously. So Monday and Tuesday specifically. Wednesday the 24th, we have unemployment claims in the AM. And then we have Christmas on Thursday. So maybe like first couple of days of the week we can get something. Once obviously Thursday rolls around, that's a no trading day. Wednesday I probably won't even be fully like I don't know. I don't know how to feel about Thursday. We'll see. But for sure Thursday and even Friday, like the day after the holiday, I don't expect much. And then next week as well, it's kind of the same situation. Early week are like those days in between New Year. So basically once we roll around to like January 5th is when we're like reset, ready to go. And usually the beginning of the year, it's like after the first week it can get pretty active for sure. So it's gonna be interesting, but yeah, let's see what we could do with the remaining days that we have left. So you think we could see entries, but not good so far? Not really sure what you mean. If you mean so far as in December's been really good. Um, at least the last 2 weeks for sure. The first week of December was whatever. Last 2 weeks have been really good. This week, again, like I'll take my model, but I just don't have like high expectations for the market to have good volume, regardless of strategy. But at the end of the day, you have to shoot your shot um, at a market. You have to shoot your shot. If you're gonna trade, you gotta just see if your setups are there. If they are, you take them, and that's it. And if we have like a preconceived notion that it's not gonna be that great of a week, then we can always just drop our risk and just trade more for the sake of taking entries, following the model, and documenting what happens. But yeah, it just depends. Like at the end of the day, when do we ever also take a time to kind of like step away from the chart? Sometimes like throughout a year, I might go on like a trip overseas, or like have some type of life events going on that make me step away from the charts for a while. But if you ever had a time where you like purposefully would pick to just like not trade and just like step away, reset, refresh, and just kind of like game plan, your next moves or whatever, you definitely would want to be doing it during this time now up until the new year. At the end of the day, you know, time moves regardless. You're not gonna. I don't ever want you guys to be the people that are like, oh, new year, new me, or like once January 1st rolls around, then I'll take my life seriously. Like that's how mentality doesn't really work. But at the end of the day, the markets do work on schedules, right? And there's definitely a time where big money also takes a break, and so yeah, I think that this next 2 weeks basically is like a really good time where you can purposefully, like just focus more on back testing, gathering information, recapping your year, setting some goals, stepping away from the charts also as well, and just kind of like enjoying time with family or whatever, like we're all in different spots mentally and in our personal lives, but at the end of the day, you got to make time to get yourself to a good space to operate, right? So that's that. Tempted to just chill for the rest of the year. I mean, yeah, I don't blame you at all. Like I said, it's the right type of time to do that. Sure. I'm gonna delete this right here. So if we zoom out and kind of see where we are at on Nasdaq, there's a couple different important areas that we have to pay attention to. So the first area was this area that we ended up liquidating back on like the end of November here, right? That was a really big important move when we had all of these equal lows that were built up throughout late September and October that we really basically bounced off of to make new all-time highs. Once that, basically ran out of gas, we saw the bearish market shift until we ended up taking out those lows. And then since then, the last couple of weeks, we've seen price basically shift up since the end of November. Yeah, about a month. We shifted back up to here. And the other significant level that we ended up kind of, looking at was these highs here. You can see how, we had, this is like that first higher time frame break of structure or shift of structure that kind of started, shifting us to the downside to take out this liquidity here. So you can see, for example, you had like all of these little built up lows here. And again, we see price basically break through that and then form, like you could say, a resistance or a support turned resistance, however you want to call that. And yeah, price basically bounced off this level and ended up liquidating here. And so when we were coming up to these highs here, basically like 10 days ago, excuse me, that was an important level for me to see how we react. And of course we did get to see, hey, what happened to my chart here? There we go. And yeah, we ended up seeing that become a very important level once again. Price basically wicked off of that multiple times and started shifting direction here. And so now where we're at is basically the middle of like, this very important low, like the extreme low and this extreme high from this range here. Okay, so if we pull up, like let's say a fib from down here all the way to these highs up here, we gotta move that one. Okay, so just looking at this low and this high, and let me change this to a range. Okay, so we are basically in the upper third of this range. Again, looking at this low to this high on the higher time frames. If we look at, dividing that into a range of thirds, right? You have like your upper third of the range here, you have your middle third, and then you have your bottom third. So in general, if we find ourselves with a clear high and low in a range that we're working within, usually, within this range, we want to be focused more on like selling, right? In the middle, it's kind of hard to tell which way to go. And then towards the bottom, you definitely focus more on buying. That's just in general with ranges, but obviously once we step into like an intraday perspective and we get all of our confirmations for our model and all those things, then we can get very precise. But in general, we are in a upper part of the range from like this low to here. And technically, like where we would be very bullish again is if we start breaking and closing above these highs. Okay, because if we start breaking and closing above these highs, then that shows me that we're looking to go all-time high again and basically break past there. Okay, so if and when that scenario happens where we take out this high, then that would be definitely my number one focus, is getting to all-time highs here. If price ends up respecting these highs here, then we could look at sells that basically take us down to this low and then potentially down to here again. So that's gonna be the thing to pay attention to. Right now, it's kind of obviously not the time to take a trade or whatever, but this is just how I always kind of zoom out and get a feel for where I'm at again in a chart, if I haven't done that in a while. And I like to do that at least once a week, like especially on these Sundays, is just to see where we're at, compared to the all-time highs, compared to the last very strong swing low and whatever. So yeah, I think right now, it's in the middle. There's no clear spot. It's just really going to be determined by these highs. Are we going to respect these highs and drop, or are we going to look to take price to break past that and then all-time highs? That's really the two situations that are what I see right now. So yeah, we'll see. As far as like smaller time frame wise, we definitely did go bullish. If we can just even drop it down to like a 1 hour, we had this low here, and then we had this high. We formed a new low. Okay, and so basically, when we push back up above this high, as we saw here, okay, that is very bullish. Okay, because that's a 1 hour shift of structure, right? It's not a 5 minute, it's not a 1 minute or a 15 minute. It's a 1 hour shift between a very significant high point where we formed a new low. If we're gonna be looking at market structure, you're gonna see pullbacks, continuations, pullbacks, continuations, pullbacks, continuations, respecting the previous highs, right? But what we see in this situation is a high that pushes lower, that comes up, comes lower, and now we're seeing a shift above this high, right? And so that usually leads to then looking at other highs that are back here, because that's what price is showing us structure wise. Okay, so that's basically what we have matching right here right now, and why I was bullish with my strategy on Friday. Unfortunately, we got like wigged out on a stop, and then price ended up crossing back later and eventually now hitting like what I would consider my TPs. The only thing, obviously, I don't hold over the weekend or anything like that, but this is basically the recap of the last trade from Friday, which is unfortunate, but we did see price basically drop, come back up. I executed entries there, took a stop loss literally by a couple points here, and then price ended up recovering. I did take a second entry up here and ended up clipping the trade for like less than a 1R just because I saw price fall flat. It's a Friday. I'm not going to hold through the weekend. But yeah, all in all, once it did cross back above here, it ended up going for a 2-to-1. It's just the timing that unfortunately didn't pan out there. But yeah, that's, kind of was expected, was to eventually get up here because of, like I said, that 1 hour structure shift above this high. So the fact that we broke this low here and then shifted above this high is why I was focused on buys here. Apart from my other confirmations and whatnot, but the fib settings for that, it's just 33%. So like if you pull up the settings here, you just put 0, 1, 33, and 66. So it just chops whatever high and low into 3 parts basically. So like people use like fibs sometimes as like retracement levels. That's really what it's like most popular for. Like people pull up a fib from a high to a low and they say, oh, it's at a 50% retracement. 618, whatever. I just personally don't care to use fibs for my strategy, but I know some people like it. They have strategies around it, which is fine. But I just use it as a tool to measure the ranges. So nowadays I use fibs really for like just to see where the 50% of an imbalance is. So like I'll use a 50% fib in certain situations for that. Like, an example of that is like, this fair value gap. Okay, this fair value gap marked in orange, right? So that's a fair value gap. I also have the fair value gap though programmed to where it draws a line at the 50% mark. Middle line, right? But the fib is the same thing, right? Like if you have the fib, you draw it from, like the wick right here to the wick prior. Then you look at where's that 50% point. Then you'll see it's the same, right? It's that halfway line. The reason why that matters to me is because, when you have like a fair value gap, the most precise point where you can expect price to like fill a fair value gap and then continue in the same direction, if that's what your bias is going to be that 50% mark. So you can see like how a 50% retracement of a big fair value gap like that is like a super great entry for like a continuation of a trade, for example. Now personally, I don't take trades off of fair value gaps and stuff. I have a very specific model, but it still helps my narrative. Like for example, the Monday trade that I took here plays off of the fact that we see it reacting off of that 50% fair value gap and then just kind of riding the rest of that momentum with my strategy there. So yeah, I don't know. I don't really use fibs nowadays for like anything more than just measuring the halfway point of a fair value gap or looking at a range and dividing it into like a upper third, bottom third, and using that to know whether I should be focusing on like selling or buying or just staying out of it or whatever. But yeah, let's just talk about real quick. Monday through Friday, I'll speed run through this. I know I also did drop a video. This video right here, where I kind of cover like my from that pre-market to that. And I did cover like the last 2 weeks of price here. If you guys want to go through that video, and you'll actually see me go like covering each and every single one in a lot more detail. But yeah, really quickly, like I'm not gonna break down the strategy again here. You can watch that video. But for the week, following the very specific model that I do teach and trade every day during New York session, we had a win right here for over a 2-to-1. And I use 2-to-1s as like a take profit reference point. Some days it goes for more than a 2-to-1, but that's kind of like my baseline of what I really want to see out of a trade. So Monday we had a 2-to-1. Wait, is this Monday? Oh, sorry, I skipped a little bit too far. So Monday we had a 2-to-1 here, okay, and then Tuesday we had a loss. So we just took a straight stop loss there, and then we had a W on Wednesday, and then Thursday we had another W right there, and then Friday ended up taking an L personally. So yeah, for the week with the model, we had 3 W's and then 2 L's. Okay, that's a 66% win rate, or I'm sorry, 60% win rate. Okay, and the 3 W's, all right, were a total of 6 R minimum, right? Again, there were certain days where like we ran for like there was one that ran for 4, but I just like to count things as 2s, 1s, or 0s when I teach you guys, because I know a lot of people struggle with like holding trades or whatever, but like on the winners, it has to go 2-to-1 plus. Like if it's not a 2-to-1 plus trade, I will let you know on here when I do these recaps. You know what I'm saying? Like that's just what it is. Like I try to keep it as simple as possible, and it's like you got a 2% winner, you got a loss, or you got a break even, so 3 W's for 6 R, and then 2 L's for a minus 2R. Okay. And so for the week, you had a plus 4R. Okay. Again, this is assuming that what's it called? That we didn't hold for more on the other bigger winners. And if you're wondering which ones I'm referencing like, for example, on this day, we had a monster trade that literally ran through for over a 9-1. Like literally, look, right? So that is way more than a 2-1. But even if you clipped it super early, which on stream when I was looking at the trades, I think it was this low here. Yeah, it was like this low, I think, right here. No, this one. Let me make sure it was that day. Was it that day? This day. I don't want to cap right now, but I'm pretty sure it was this day on stream where we did like, it was like literally 4R, like right here. And then price started like wicking up here, and I was like, oh yeah, let's just secure a 4-1. Obviously, I wish I would have held for more than 4R that day, but whatever. But assuming you did 2-1 minimums and you took the entries as R, then this is kind of like the result for the week with the strategy. So I don't claim to do like crazy R multiples when I teach, just for like practicality purposes. And I'm not ever saying like we win all the time. So people will see a 60% win rate and see that I only won one more trade than I lost. But at the end of the day, like it just comes down to understanding your risk rewards. You know, like if your risk rewards are there, that's really what matters to me. So, you know, 4R, and I do tell people like if you're not taking that many trades to up your risk, you know, like I usually tell people, especially if you're on prop firms, like you want to give yourself 2 weeks of straight losing, straight losses to burn your account. Okay, so depending on what your drawdown is allowed is how you need to tailor that, right? Now, does that mean that you can never lose 2 weeks in a row? No, not necessarily. I mean, well, personally, I my model will not lose straight 2 weeks in a row. I can't say never, but I've never seen it even lose every day for 1 week, you know? So again, I try to give it an excessive buffer so there's no like misinterpretation of overselling or overhyping something. I'd rather under promise and over deliver if I'm gonna teach you guys something, right? But yeah, I try to put yourself into the mind of having 2 straight losing weeks, meaning that like you take trades every day, Monday through Friday for 2 weeks straight, and you don't win a single trade. You get what I'm saying? Like that's what I'm showing here. And yeah, based on that, you're talking about, again, depending if you have a 10%, let's say 10% max drawdown, if you're like on a CFD firm, right? And if you don't know what that is, it's like if you're using TradeX Mastery, FTMO, you know, something like that, that's CFD trading. You have a 10% max drawdown, so you have like a 5% weekly risk, right? Which means that if you're taking 5 trades, is 1% risk per trade, for example, right? And then if you have futures prop firm where you have 4% max drawdown, all right, that means that you're doing 2% weekly risk, and you divide that into 5 trades. So 5 trades into a 2% weekly risk. What's the exact math on that? 5. Oh god, I'm so like out of it today. Divided by 5. Okay, that's what it is. Yeah, so 0.40% of risk per trade, roughly. You know, you can up that to like 0.5%, for example, if you wanted to. But like for example, like if you're trading like a 50K futures firm, you're talking about risking like $200-300 on a trade. right? Because if you lose $200 per trade times 10 trades, that's 2,000. Yeah, 2,000. So, um, 10 trades, yeah, 2 weeks. Yeah, roughly around like $200, right? Because 40% of 500, which is 1% risk, is $200. Yep. So it's $200 of risk per trade, for example, right? So like on a trade like this, all right, or like on an account like this, if you're on a CFD prop firm and let's say you're on like a 100K account, right? This type of week where you have a 4R, all right, and we're taking 1% risk per trade, that means that you could have had a $4,000 week. Okay. Excuse me. And then if you have like a futures prop firm, you're risking 2%, or you're risking $200 per trade, and you get a 4R. That means you're doing about like a $800 week. Again, this is on a smaller account, so like futures prop firm, let's say 50K. Okay. Now the difference is depends on the firms and all that stuff and the rules, but um, like on the futures prop firms, you can have that times uh, whoops, times 3 accounts or times 5 accounts. It just depends what firm you have, how many accounts they let you have, and all that. But even if it's like, let's say you have three accounts, whatever, that's about what, $2,400. So that's to give you an idea. And this is again being much more conservative. If you're giving yourself that 2 week buffer, if you're giving yourself 1 week buffer, then that number like doubles. You know what I mean? So you have to know your numbers, right? For the most part, we haven't really had like a week in I don't like to overpromise, but we haven't had a week where we do like negative more than like 1 or 2 R max, and I don't even know how long. Which is good. It means you could technically be more aggressive and do like a week's worth of risk. But the thing with that is you have to execute properly, man. Like that's the thing. It makes this sound so achievable and so easy, and it is, but it's like how our mental strength to follow the plan, the strategy, the risk management, not take revenge trades, not take secondary trades. Like all those things do matter a lot, because if you change any of those factors, then all of a sudden your total risk on a day or in a week starts exceeding the plan, and you start closing trades early. If you start doing stuff like that, man, like it's not gonna work out like that. But again, I'm not gonna cover all those setups in detail right now again, because there's just no point. Like I'm not like, you can watch the video that I posted, and it covers all the setups. But yeah, again, just setting up for 2 to 1s, and you know that, like, just doing that as a standard 2 to 1s or break evens or -1s. This week was a 4R week based on that. So yeah, the execution is really what will alter that slightly. So you want to try to get your execution to just be there and not fall into silly things like revenge trading and this and that. And if you do, you're gonna just obviously fail an account, have to do this again. But this is assuming that you are following the plan and in line, right? And yeah, it's about maximizing this. So again, this number right here could be less, it could be in the red, or it could be more. Okay, so like last week, for example, not this last week, the one before that. Oh man, I forgot I deleted that off my chart too. I think I have it here. Hold on. Basically, okay. Uh, 5 hour week. 5 hour week. Okay. So, what's it called? Yeah, so that week was a 5 hour week before. So, basically, kind of like the same number that you see here, maybe a little bit more. So, on like the week prior, this would have been actually 5K on a 100K account. And then this one would have been 1,000 here. Um, yeah, because we had a plus 5 hour week. So again, even if you have then a red week or like a red week and then like a very small winning week, at the end of the month, if you have even like 2 out of the 4 weeks where you do like 3 to 5 R and you have enough funded accounts, or if you have sizable accounts on the CFD side, like a 200K, a 100K, like, dude, you can literally do so much, like monetary wise. Now, if you're talking about making like 6 figure days, 6 figure months, like, you guys got to understand, like, that level is not going to be um without having like a ridiculous amount of capital, or you just went crazy gambling and got really lucky. Like, all I'm gonna say is, like, for the people that really want to have like crazy big numbers like that, you have to have the right like space where they're actually gonna pay you that, right? Because for you to like go into like an unregulated forex broker and just like try to gamble and flip an account to like 500 or $1,000 all the way to like 100 grand and then just request a 100 grand payout, like, good luck. Like, a lot of them are gonna find a way to not pay you that. It's it's just such a, not a luck. I mean, it's kind of like a lucky thing if you think about it. um so that's why I always tell people, like, focus more on consistent payouts and touching like good money every month that you could cycle into having like a real live futures trading account or something like that, and then diversify that into like long-term stocks and cryptos and other forms of investments. Like, that's really the way to go. um so don't try to hit like these stupid crazy numbers. Like, focus more on just building yourself a money machine, like finding a way to get money weekly or at least monthly, you know what I'm saying? um and the key is to have multiple places where you're funded at, 3 accounts on this firm, 3 accounts on this firm, whatever. Because even if you have like a CFD prop firm account that it's like a 100K account or a 200K account, and let's say you have like a 3-4 R month or whatever, and you're taking out like, I don't know, 10K, 12K, 15K, you're probably gonna have to wait a while for that payout, and then you're gonna want to keep trading or like not sitting on your hands. So that's why I say, like, have other prop firms and keep that going while you wait for one payout and all that. But yeah, this is just like a realistic, very practical way to look at setups that are not super flashy. Like 2 to 1s are not, like, nowadays people see 2 to 1s and it's like, it's not that crazy, and it's like, all right, cool. Like, if you want to go find somewhere that does like 20 R trades consistently and you can pull it off, hey, kudos to you. Like, I'll learn from you, straight up. But that's easier said than done. Yeah, I just think certain ways of trading are not for everybody, and it sounds super easy until you actually have to come and do it. But this approach, again, is the same strategy at the same time of the day, same everything. You just have to wait for the market to do it. And we've seen days where, like, I've had like 2 or 3 no trade days the whole week. And to not take a trade for 3 whole days out of the 5 trading days, plus the weekend that you're not trading, it feels like you haven't done anything in like 5-6 days. For a lot of people, they're like itching, like, that's like too long without taking a trade. And it's like, all right, like, if you want to trade, cool. But if you want to trade to like get better and withdraw and all that stuff, like, we got to be a lot more disciplined and intentional with our setup. So I have 95K and I lose the account on 93. Do you recommend to use risk on 250 or 500? Well, it just comes down to like knowing your numbers. This is the thing. Like sometimes when people ask me this question, that question is like without context. Like, do you take your own trades? Do you take trades from other people? Like you take signals, or because like most of you guys are probably in Akashic, some of you are not. I don't know. Um, but many times, we're taking trades from like other people. And sometimes you're taking your own trades. And if you are taking your own trades, it's like, okay, well, why are you taking the trades that you're taking? You know, are you following a specific model? Are you following one strategy? Are you trading one pair, one asset? Like that. These are all things that we have to understand. And I want to make like a video or do some type of like training heading into the new year around this stuff. But like things you need to know in order to, and this is answering your question about whether you should risk 250 or 500. So I'm not going around the question. I'm just explaining to you, like, I'm not just gonna give you an answer. Like I could be like, oh yeah, dude, you know what, stick to 250 and just leave it at that. But you don't even know why the hell I'm probably telling you that. And so maybe you listen to me, maybe you don't, but like you don't know what you're doing, then that's not good. So I'd rather explain it this way so you can kind of understand how you're gonna take it. Like, how many trades a week are you taking? Okay, that is super huge. That's like the foundation of everything. And the problem is you could see this and be like, oh, I don't know though. And the reason why you would not know the answer to that question is because most likely you're taking trades from other people. And I'm not saying it like to say that taking trades from other people is necessarily a bad thing, because I know I come from a space where part of our product offering, right, is like, hey, you're new to trading, you can leverage experts. We take trades that you guys can decide to follow with, and blah blah blah, right? But it's not just me. Like there's like a bunch of other educators that trade as well, and some of them are taking 3 trades a day, 5 trades in a day. You get me? So like it's so different based on everybody. Like I only take max 1 to 2 a day, and really it's mostly 1. Okay. The only reason why I even take a second one is if I get barely stopped out. Like literally Friday is a perfect example of that. Friday I enter here, we get wicked out, and then literally the next candle we start crossing back up. So it just happens to be, and this doesn't happen very often, where my 50-point stop was just not enough, but the idea and the intention of the market was still there. And so when I see it cross, I jump in again. Now, again, the only thing that sucked about this was that price didn't actually run to like a 2-to-1 plus target on Friday, because it just ran out of time and gas for it to do it. Like you see now, it's doing it. Like right now, this trade from Friday, if hypothetically I were to hold it, I would be up over a 2% right now. Be like 2.4. Okay. So that's why I would take a second one. But most of the time, like Tuesday's trade, this one right here, right here, the strategy called to be looking for buys, I jumped in, and then we just get straight smacked. And then price literally sat around the whole day, and I was like, okay, I'm not trading this, and I walked away. So I took 1 L and I stopped, right? So again, for me to take 2 a day is very rare. Like Monday I didn't take 2, I only took 1. Wednesday we only took 1. Thursday took 1. So yeah, point is you don't need to necessarily take so many trades a day, but people are. Like some people do. Some people do take 3 trades a day, 5 trades a day. So how many trades a week are you planning to take? Again, if you're completely taking trades from other people and you're not even familiar with what's their usual amount of trades per week, this is where you have to start. Like you got to kind of do your homework on what you plan to do and then try to stick to that. So for some people, it's like on the low end, like me, it's like maybe 5 to 7 trades a week max, right? Like this is really the range I'm in. And I say 5 to 7 because if I take one every day, it's 5 trades. Honestly, it actually might be 3 because some weeks we have 2 no trade days. So it could fluctuate on the low end to 3 and on the higher end somewhere between 7, right? So like for me, that's why I like defaulted to looking at around 5 a week, all right? For other people, this is like damn near a daily thing. Okay? So in general, once you know like how many trades you're planning to take a week, it's like how much risk percentage per week are you planning to like have out there, you know? Because again, assuming that you want to risk, like imagine if you take 15 trades for the week and you take 1% risk per trade, that's 15% risk for the week. And that's more than the allowed 10% total drawdown for CFD. And for prop futures, that's like 11% more. So if you're doing that, your chance of the chance of you blowing an account in a week or less is very high, because you're taking too many trades, or you're using too much risk percentage per trade. So you have to look at it like, I don't know how much I'm gonna win, and I don't know how good the trades are gonna be. But one thing I can plan for is me absolutely sucking. Like I'm dog water trash this week. Okay, like I'm sure a lot of you have known what it feels like to be trash for a week. So there you go. You should absolutely be comfortable with knowing how that is and how to plan for it. You get what I'm saying? So if you know that you're very capable of sucking and losing, create barriers for yourself to like keep that under control. Because at the end of the day, blowing an account in a day is way worse than blowing it in a week, and is way worse than blowing it in a month. Obviously, none of those three outcomes are still what you want, because nobody just wants to freaking do this to lose money, obviously. But you don't want to be losing 5 accounts a month and just running through your savings and just throwing away money, dude. Like, don't be doing that, you know? So that's why I feel like the numbers that we come up for when it comes to like your risk is based on your strategy, you know? So you need to know your strategy. Again, this is the pros and cons of you taking trades from other people is simply gonna be that like if you're gonna follow somebody else, for example, you also need to know like, and sometimes that's why people have to follow somebody that they're learning from and copying their trades from, to like go through months of doing that to know like, hey, I know that this person, from the months that I've been taking their trades and learning from them, have taken 50 trades a month. And then this guy that I follow over here takes 15 trades a month. So it takes time for you to get to know anything in this space. It takes time to know how to draw a chart on TradingView. It takes time to know how to press the buttons on TradeLocker, MetaTrader, whatever you use. It takes time to, know how to read an uptrend, a downtrend, to learn what fair value gaps are. Like, this thing takes time. And to know a strategy or to know somebody you're following, it's going to take you gathering information for an extended period of time. Not for a day, not for a week, not for a month. It has to be for a long time. So personally, I always like do these calls, or I talk to people with the intention of you becoming more self-sufficient. So it doesn't mean you can't have certain accounts that you're going to, like, let's say, leverage to copy other people. Like, fine, whatever, right? But if you want to get good at it and you want to learn, you need to be able to take your own positions and know why you're taking your positions, and then creating your own plan, right? So, for example, is knowing your strategy. For me, right, I take one trade a day at 10 a.m. Eastern earliest. Okay, so I take a trade at 10 a.m. Eastern, or let me say I take one trade a day from 10 a.m. to about 2 p.m. Eastern on average. Yeah, right. So that's why I know, number one, like I'm gonna take on the low end 3 trades a week probably, because some days the strategy might not activate, and then on the higher end I might take 7, like I said earlier, because some days I have to enter twice because I take one L and then re-enter again because it's activating again or something like that, right? So I know that part about it, and I know what's like my high side and my low side, and so it helps me look at my risk. And then I look at, okay, if I want a safe buffer, like I need to look at my win rate. What's my win rate and what's my average risk to reward. These are numbers that, like, if somebody asked you, like, imagine if somebody had, you know, $1 million live capital ready to hand. Somebody had $1 million live capital ready to hand to you tomorrow, right? All you have to do is convince them to give it to you. How are you going to convince them? The way that you're going to have to convince them is you have to show numbers, man. Like, you got to show, like, hey, this is my strategy, this is what I look for, this is actually, what has happened the last week, 2 weeks, month, 2 months, 3 months, 4 months, 5 months, 6 months. Like, you got to have data on data on data, and you have to be able to, like, explain to somebody why they should give it to you. And if you put yourself in that state of mind, it'll really test you to, like, know your numbers. So, like, again, the last 2 weeks, I had a 60% win rate, and that's usually the number I fall into, right? Usually it's a 60% win rate, give or take. That number is gonna fluctuate, mostly due to, like, how many break evens I might take. Like, there's some weeks where, price goes towards 1% and then comes back to break even, and I close the trade break even, and I might have like 3 break even trades in a week. There's some days where we're gonna have more break evens, some weeks where, like, these last 2 weeks, we had the majority of the setups actually won. So my numbers over the past 2 weeks are, like, pretty, like, nice and inflated compared to, like, maybe the lower side of the mean, but that's what washes it out over time. And these are things you got to get to know, man. It's gonna be like, you have to pick a strategy and then stick to it, back test it, forward test it, live trade it for at least 3 to 6 to a year, like 3 months, 6 months, a year. And there's just no way that, like, most people are there right now and are not committed to doing that type of data gathering. But let me check some questions here, because I know I haven't, like, given a chance to, like, ask here. So yeah, for the question about the 200 or the 250 or the 500, like, I don't know how many trades you're planning to take. Like, it's just simple math. If you risk 500 on a trade, it means you have 4 more losing trades before the account's done. So you gotta ask yourself, like, how confident are you that you won't lose the next 4 trades in a row? If you're, like, super confident that you'll win at least 2 out of the next 4, and that you're gonna make, like, let's say double the reward compared to the risk on those winners, then yeah, you can use that, and it's gonna pull you out of the fire a little bit faster. The less risk you use, the more bullets you have to, like, shoot your shot at the market and get something back. But obviously, the less you use, the longer it's gonna take to claw back. And that's the thing that's frustrating, when you go in drawdown, is, like, you go, like, very aggressive, like, when you're trying to build, and you go, like, like, you're at break even, and maybe you went up like 2% on your account, and then you're, like, sizing up pretty nicely, and you take, like, a loss, and you're like, damn, I'm down 2%. And you're like, all right, I'm gonna, like, risk less now and claw my way back up. And so you win, and now you're, like, almost back to break even. But you've taken a good amount of trades that are much smaller to get there. And then you start getting, like, oh, okay, I've won a bunch of trades in a row. Like, I feel like I'm back in my groove. Time to size up so I can get back into at least up here. And then you size up again, and then boom, you take another hit. And then you size down and you go back up. and then you get frustrated and you take a hit, and then you blow your account. Like that cycle has happened to me a lot of times. Because it's like you started off fresh minded, you start doing good, you get excited, and then you start losing a couple where you had big position sizing, and then you realize like, damn, I got too cocky, let me chill out, backtrack, let me build myself back up. Oh, okay, I built myself back up, I'm ready to go hard again. And then you take a L, build yourself back up, you get frustrated at this point, you've been taking the challenge for way too long, and you're like, time to go heavy, it is what it is, and then boom, 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 boom. Like this right here is very, very common. But a lot of that, again, it comes down to like, when you start the challenge, you might just get lucky the first couple of trades and get it up to here. Like, how did you go from 0 to 2% or 3% or 4%? Like, how did you do it? Because sometimes going from 0 to 3% is that you took one trade with a 1% risk and you like, boom, flew up like this. And you're like, ooh, good, I'm up 3% off one trade, I'm balling. And then you keep risking 1% and you have like a 1, 2, 3 trade losing streak, right? And if you analyze that 3 trade losing streak, again, this might not be everybody, right? But out of those 3 trades that you took here that brought you back down, 2 of them weren't even following the strategy or the plan. 1 of them did. So you actually took 1 L with the strategy, but then you got very confident because you're up 3%. You start taking other trades that have nothing to do with the model, a trade from a different person, I don't know. And then you're like, damn, I know because I live this life, bro. Like I'm telling you guys from experience. Like it's like I've failed many times as well. You get me? Like that's how we know this stuff. But the only thing that fixes all that back and forth is you have to have the same approach every day. If you don't, then you're always going to be back and forth. Like think about it. You're changing the formula when you feel good. Like if you feel good, then you start doing stuff you weren't doing to get yourself there. And then when you feel bad, you start changing it up again to try to make yourself feel good. Like that's why we revenge trade. We change our position size. We start doing stuff that like you wouldn't do if things were going well, and vice versa. So it's like you gotta find something that no matter whether you're in profit or drawdown, it's the same trade reasoning. It's the same position sizing. Like it's what allows you to have consistency. And I feel like the more trades you take in a day, the more you open yourself up to fatigue, revenge trading, and just that habit of just hitting the buy and sell button like it doesn't matter. I don't know. I try to put a more significant, like I try to put some significance to entering a position. Like again, it's the mindset of like putting yourself in a state of mind where the money you're risking matters to you, but it's not gonna like destroy your life either. But put yourself in a hedge fund manager's position, somebody who's managing $100 million for big time world clients. Like, you think they're just gonna hit the button on a random trade? No way, bro. There's no way that somebody who's managing thousands of people's money, that has 8 figures in capital, is just gonna like change up their strategy because they get bored, or they're like, oh, I'm up, a mil on everybody's money. Like, let's get fancy today. Like, you think they're gonna do that? You can't. You just can't do that. So you have to it's like you have to lie to yourself and put yourself as if that's how serious your trading account was. And that's easier said than done, like to psych yourself into like putting that much, not pressure, because you don't want to overthink your trades either, but like you got to take it serious, man. Like it has to be taken very, very serious. And sometimes we think we're taking it seriously, but we're like half serious or like 70% serious. That doesn't really work. Like if you're not fully serious, you won't be able to keep doing it. And you might be serious for like a month or 2 and then actually do well, but then you just lose the next 3 months and you kind of like forgot how the hell you even made profit in the first place. You know what I'm saying? There's no finish line. There's no thing where like, oh yeah, I got a payout or 2 over the last 2 months. That's like I'm never missing a payout for the rest of my life. Like I got it now. Oh, I'm good, coach. Like we're good now. Not if you start getting cocky, or not if you stop following a process, not if you stop Like if you start taking for granted how you get there, you know what I'm saying? The success in this space and in any space, sports, everybody has an expiration date that is totally due on like their physical body being able to handle the work required or the mental fatigue, you know? Like I look up to LeBron a lot as a basketball player, like in the sense of longevity, like how long LeBron James has been able to put up all-star numbers for 20 plus years more than anything. So like put all the jokes aside and all that stuff, you know, people love to like talk ish about athletes just for fun. Like I'm just being like just respecting somebody who can do something at a high level for an extended period of time with no reason to do it. Like you already made, you know, $1 billion, you already have a perfect family, you've already won every trophy there is to win. So why is it that you're still able to outperform people physically and mentally 20 years in? And it's like you love the game, you know what I'm saying? And that's the same thing for trading, for network marketing, or for anything. Like if you don't love the process of marking up a chart, looking at the market, researching, waiting for your model, executing your model over and over, like you don't really care for the game. And if you don't, I feel like you're capped out. Like it doesn't mean you can't make it to the big leagues. It doesn't mean you can't make some good money, but you won't like reach your full potential unless like this is that much of an obsession for you, you know? And this doesn't like when I say obsession, it's like a lot of my day is not focused on trading actually, you know? Um it's just a really like strong desire and focus from the time that I do have dedicated to it. So if I do a outlook call like this, like I haven't thought about trading all day today, like at all, zero. I haven't thought about trading all day yesterday at all, like zero. Friday, just earlier in the day, and then like by the middle of the afternoon, I just turned off my switch. So I haven't cared about trading for the last 2.5 days, like at all. I don't care. I'm not back testing. I'm not looking at a chart. I don't even care about anything. But as soon as I turn on this weekly market outlook and I start recapping and talking to you guys and looking at the charts, like now I'm like locked in, you know? And as soon as this ends, I'm turning off my brain until tomorrow morning because I don't care what price does during Asia right now. I don't care what it does during London because I know that regardless of what it does, I'm still going to trade my strategy at 10 in the morning. So even at 6, 7, 8, even 9 in the morning, I still don't care what price is doing. You know, but there's people that and this is fine like if you're like learning and you're trying to get into trading and you're like feeling like you want to be on the charts all day, fine, dude, like put in the chart time and like see your charts into your brain right now. But after a while, you just kind of like get tired of it, you know? Like I don't or like you realize efficiency over everything, you know? Like do I want to stare at charts all day? No, bro. I really don't. But I do love it and I just realized like I can love it at its max for the time that it matters. So like once 9:30 a.m. hits around, like when the stock market opens and it's almost half an hour out until my window, like that's when I'm like, all right, like let's see what's up, like let's prepare. I'm about to take a setup, and then we take a setup. We have an outcome, whether it's a stop, a break even, a TP, and then that's it. Once we're out of that trade, you know, maybe I care about what happens for the next hour or two to see like, oh, did I make a good decision? Could I have held that trade longer to make more money? Was I lucky that I closed 2% because right after it came back down to my entry? Like I always will like stay at the chart or at least look at the chart a little bit after I close my trade for a little bit to see like how it ended up playing out after my decision to exit happened. And after that, then I'm gonna go play basketball, eat lunch, work on other stuff, whatever. And I literally won't care about trading for the rest of the day until the next day. Obviously, as an educator, people will message me, ask me questions about stuff, and like, you know, I get back to people and whatnot out of respect for the community, and I like to help people. But like, I'm just answering questions. Like, it's not me actively like wanting to look at a chart or entering another trade, you know. Now, for other people, that's so different. Like a lot of people that are trading right now, especially newer people, their day is the opposite. Their day is like you wake up and you're probably going to work or you're doing whatever, and you're looking at a chart on and off, literally from like the first hour that you're awake probably until you go to bed. Like there's some people that literally look at a chart nonstop all day. And it doesn't mean they're taking a trade all day, but like they're looking at it all day. Or some people trade for like an hour or two during New York, and then they chill for a couple hours, and then they'll trade one or two during Asia, and then they'll stop, and then they'll take one during London. And it's like, dude, you never stop. And I'm sure there's some psychopaths out there that's their lifestyle and they do really good from trading and whatnot, but that's not necessary. Like there's plenty of people that you can look up to that trade for an hour or two a day or less sometimes, make really good money, and that's it. So whatever, man. That's my rant on that. But I go through that whole rant because it's like to tell you, like, if you don't know how much to risk per trade, or if you don't know this or that, it's because like you just haven't put the time towards the thing that matters more, which is knowing your system. You know what I'm saying? Like it's kind of like if you drive like if you're in a F1, right? F1 racing, like these people are like some of the best athletes in the world, right? Like if you're an F1 driver, like this is probably the most revered form of racing, right? Craziest cars, craziest drivers. Like these people are like best of the best in the world, and do what they do is incredible, right? But like, how many races do they actually do a year? How much time do they actually spend in the car compared to them practicing outside of the actual race? Compared to them tuning the car, researching how to get the best performance out of the car, the driver doing simulations, or like working on their fitness, like in the gym and eating healthy and being physically capable to drive that car at their best as an athlete. You know what I'm saying? Like it's the same thing. Like the amount of time you spend trading is not really a lot. It's the stuff you do to like train yourself for the moment that actually like is most of the time, or most of the actual work that changes everything for somebody. So like these calls right now, for example, do help a lot, because if you're actually like listening to me and paying attention and like internalizing this information, maybe it changes a habit that you have about, damn, you know what, like I really don't know what strategy I'm doing, or I really don't know like when I'm gonna take a trade, when I'm not gonna take a trade, how much risk am I gonna use, like let me outline for myself, like what am I really doing here? Because if you just casually try to make this happen, it's gonna be bad, man. I'm not gonna lie. Like if you just casually pick a random lot size or contract size tomorrow, if you just feel like, oh, I feel like the market's gonna go up tomorrow, let me go for a buy. I mean, dude, look, you can get lucky short term, but long term, like that is just gonna catch up to you. So, what's my favorite driver? I don't know nothing about F1, so I'm not gonna tell you I know anything about the drivers, but I know how to make analogies. So I can relate it to basketball. It's just like the way you do one thing is how you do everything. Like everything in life is related. So it doesn't matter if you're talking about driving, trading, network marketing. It doesn't matter. Like you want to get a result, and to get that result, you have to have a certain set of habits, and you have to become a certain type of person that have the focus, the drive, the consistency, the desire. Like there's certain things that are principles in success, and that's stuff that you read from like Napoleon Hill. Like you study Napoleon Hill, Think and Grow Rich. You study Bob Proctor. Like you can study a lot of people that are world renowned on personal development and success coaching and all that stuff. And it's not about motivation or anything like that. It's just understanding success principles and how to like put that in a formula. There's a lot of great thinkers who have studied successful people in all different aspects of careers and ways of life, and there's always going to be commonalities between them. There's going to be a lot of differences in personality and stuff like that, but a lot of them have certain things in common, which is like obsession with their craft and consistency and the grit to push through failure. Like, there's certain things that you can take away from all people that have gotten to a certain level, and that's what you need to actually build first. You know what I'm saying? Like I don't care like how good somebody is at like looking at a chart or doing math. I'd rather take the person first who like has no limiting beliefs, who has a lot of self-confidence, who's coachable, teachable, willing to fail and keep going. Like if you have those characteristics, I would bet more on that person to step into this or some type of like, result driven like opportunity. Like you got to produce, right? Like if you're in trading, you have to execute in order to win. There's no pat on the back or there's no salary that you're making just for sticking around. And that's the thing. Like a lot of people, like we work jobs or we do things that pay you or compensate you and keep you afloat. But dude, when you step into sales or you step into trading, like where if you don't execute, you're not making money. Like that's really what makes a person better. There's just a lot of ways that people make money that requires them to just get by. Like I worked at a bank for many years and I felt like I could do my job on autopilot, like as a banker. And some people can't do that, but some people can be a construction worker on autopilot. You know what I'm saying? Like my dad and my father-in-law do like construction and manual labor, but like at, managerial positions, for example, or like my dad has his own business or whatever. So um like they're good at that. But for me, and what I'm saying is like for me as a banker, for some other people, it may not be easy to like sell credit cards or open bank accounts or help people understand and follow through with commercial loans and stuff like that. Or get people to invest into like a financial advisor that's gonna help them build a portfolio. Like I just felt like I could do that. Like I was good at connecting with people, getting them to like me enough to want to do business with the bank and trusting me with what I'm saying and all this stuff, right? But at that job, like I'm making what 3 4K a month, you know, and it didn't really challenge me at all. Like I could wake up literally at 30 40 minutes before work, super tired, super out of it mentally, just pull up half asleep to my job and literally get on my desk as a banker and just start hitting phones, getting people to open accounts, processing a cash withdrawal, and setting a credit card. And I just do that for 8 hours a day, and then I clock out at 6 p.m. and drive home. Like I could literally do that without trying at all. And that's what some of you guys might be doing with what you do, whatever jobs you have or whatever career you have. But there's a reason why I was only making $3,000 a month, $4,000 a month, or whatever, right? Because that job is not that challenging. But why do you think you see people that are in Akasheks that are building the business and they're doing network marketing and they're making 10 G's a month, 50 G's a month, 100 grand a month or more? It's because, dude, like you cannot just be a leader to thousands of people by getting by. Like you don't just wake up and you're like, oh yeah, you just hit a couple buttons here to like process a transaction and print a receipt. Like no, dude, as a leader of thousands of people, you gotta check up on people, you gotta go close business, you gotta drive to an event, you gotta fly to an event, you gotta have the right energy, the right presentation, you gotta post on social media, you gotta be somebody, Same thing with trading. Like I can literally treat trading how I did my bank job, but you're not gonna get far. Like, it requires you to like really have a plan, really be locked in when it's time to execute, and then fail a lot and actually be able to pick apart what's going wrong, what's going well, changing things. It's a process, bro. It's a process. I never will ever tell anybody this is easy, but the process technically is simple, and it always looks simple every time you kind of like come to the end of the week or you're gonna start your week and you just look at the bigger picture. You're like, damn, bro, like this is so achievable. But it's that moment, in the moment when it's time to execute the trade, where all the stuff you prepped for, you can just throw it out the window because you get scared, or yeah, you're just thinking of the outcome being a bad outcome. You know what I'm saying? Like, oh, my strategy's about to activate, but I'm scared that I'm gonna lose. I'm not gonna take it, and then the trade flies without you. You just missed a big opportunity, you know? Or vice versa. You're like, oh, the strategy is calling for me to do such and such thing, like I'm supposed to sell here, and then price gets there and you're like, you know what, I know I'm supposed to sell, but like I feel like the strategy is not gonna work today, I'm gonna buy. And then you buy and then it hits a stop loss and you're like, damn, you know. So you might have literally 2 out of the 5 days of the week where you like bought instead of sold because you were trying to outsmart the market, and then the other day was like you just got scared to take a trade and now you've missed out on 2 winners, and then the next 3 days of the week are like a break even day and a loss, and all of a sudden you're down 1% or 2 for the week. Versus if you didn't get scared on the first setup and if you didn't go against your strategy on the second, you would have won +2R on each of those, and for the week you'd be up like +3. Like the difference of being up for the week +3 and -1 is actually like maybe 15 minutes of like a moment of execution that you didn't do properly. And if you've been trading for a while, you know it can come down to like that fraction of a few decisions. But the craziest thing, dude, is like once you understand what you're looking for and you actually just follow through the execution correctly, with enough capital, that's where you're like, wow. Like the difference between somebody who is just barely failing accounts or just breaking even and somebody making really good money is like, it's not that far off. It's actually very close. But execution, dude. Like if there's anything you want to pray for or you want to work on above everything, is like give me the focus and strength to just execute properly. Some of you guys don't know what to execute. That's where you have some grace, where it's like you can't beat yourself up if you don't know what strategy to use or whatever. But you know, at some point you gotta pick and you gotta try it. And you know, if you see that person teaching it doing well, or if their students are also using it and doing well, then you know, like, damn, like let me be open-minded to try this strategy and do it. Eventually you're gonna find a good strategy that you really like, whether it's mine or not. And at that point you gotta like do it, and then you'll probably still fail because you're not executing properly, but you know, like, damn, it was my fault. Like it wasn't like once you find a strategy where you realize it actually really does work, but the problem is how you're executing it, not the strategy itself, that's when you know you're in a good spot. You just need to work on yourself, you know what I'm saying? And that's where things can change pretty quickly. But we've been on here for quite a while. I usually cut these off a lot earlier, but I don't know, I feel like I don't know, I felt like I had to say all that stuff today, so hopefully it helps somebody here. And yeah, let's see what we do this week. Tomorrow I have my session in Spanish at 11 a.m. Eastern, so about an hour after my strategy kind of starts or whatever. And then Tuesday, Wednesday we'll have English. Thursday's Christmas, so I will not be streaming on Thursday. And then we'll see at the end of the week, like if we I don't know. I don't really know what to expect with a holiday week, but let's try at least the first couple of days of the week, Monday through Wednesday, and see what happens. And yeah, so appreciate you guys. Hope you have an amazing rest of your Sunday. I'll see you guys throughout the week. And yeah, with that said, much love. Appreciate y'all. And let's crush it. If you guys want to buy me a Christmas present, you let me know. I'll send you my Addy. Just kidding. All right, guys. Peace.